Hey everyone! So, have you ever seen this happen? A company's profits go down, but then its stock price just shoots up? It makes no sense, right? Well, that is exactly what just went down with ABB India. And today, we're going to figure out how on earth that happened.
Okay, so let's get right into it. The company drops its latest results, and boom, profit is down 18%. A pretty big drop. But then, on that same day, the stock climbs almost 8%. It's a total head-scratcher. So how does bad news suddenly become good news for Wall Street?
All right, to really get what the market was thinking, we have to start with the numbers that confused everyone in the first place. Let's unpack the part of the story that, on the surface, looks pretty bad. And there it is. Profit after tax for the quarter was 434 crore rupees. That's a huge 18% drop from the same time last year. I mean, you can't really spin that number. It's a serious hit to the bottom line.
And yet, this is how the market reacted. An 8% jump. So you've got profits going down and the stock price going up. That's the paradox we're here to solve. First things first, though. Why did the profits even drop?
Well, the reasons were actually pretty straightforward. The company got squeezed by the rising cost of materials and labor, plus they took a hit from all the swings in foreign exchange rates. So the key takeaway here is that these were real-world pressures. This wasn't some funky accounting. It was a genuine profit squeeze.
But here's the thing. It turns out the market wasn't even focused on that part of the story. Hidden underneath that headline profit number was something else. A figure so strong it completely flipped the script. This is where we meet the real hero of the day.
And here it is. Get this, a massive 52% year-on-year jump in new orders. We're talking over 4,900 crore rupees in new business. This one number, this is the key to the whole puzzle. It's this powerful signal that says, yeah, last quarter's profits were a little weak, but future business is absolutely exploding.
And just to put that in perspective, this wasn't just a good quarter for new orders, it was the best fourth quarter for new orders that ABB India has seen in 5 years. That shows some incredible momentum. So where is all this demand coming from?
Well, it's coming from everywhere, and specifically from some of the hottest parts of the economy. You've got data centers, the auto industry, huge infrastructure projects in railways and metals, plus buildings and construction. This isn't just one lucky deal. It's a sign of really strong, widespread demand for what they do.
Okay, so a ton of new orders is great, but how does that actually give investors confidence for the future? Well, the answer is in a little thing called the order backlog. Think of it like a bridge that connects today's new business to tomorrow's actual revenue.
To really get this, you need to know the difference between two things. On one side, you've got orders. That's just a snapshot of the new deals the company won this quarter. It shows what demand looks like right now. But on the other side, you have the order backlog. Now, that's the big pile of confirmed work they still have to do. It's not about current demand. It's like a crystal ball for future guaranteed revenue.
And that brings us to the total size of their backlog. By the end of the year, ABB India was sitting on a mountain of confirmed orders worth nearly 10,500 crore rupees. That is a massive pipeline of work, and it's what gives investors a ton of confidence that money will keep flowing in for a long time to come.
So now we can see all the pieces of the puzzle. We can finally understand why the market made the decision it did. It was basically looking at two completely different stories, one about the profits from the past and another about the potential for the future.
Investors had to weigh these two things. On one hand, you had that short-term pressure on profits that caused the dip. But on the other hand, you had this incredible signal for future growth from that 52% order jump and that giant backlog. And, well, you can see which one they cared about more. It wasn't even close.
And that's really the bottom line here. The market made a bet. It decided that the profit squeeze was just a temporary problem, but that explosion in new business was a powerful, long-term sign that the company's future looks brighter than ever.
But hold on, the story doesn't quite end there. All this optimism comes with a pretty steep price tag. The company is trading at a price-to-earnings ratio of 76. Now, all that means is that the stock is pretty expensive compared to how much profit it makes. A high number like 76 tells you the market isn't just hopeful about growth, it is absolutely expecting it.
So here's the real takeaway. The market has already priced in a ton of future success. The puzzle of why the stock went up is solved, but it leaves us with a brand new question. With expectations this high, the pressure is now on ABB India to actually deliver. They have to turn that massive backlog into real profit. The big question is, can they do it?